Anthony Grasso here, bringing you financial news you can use. In this series of videos, we're going to look at stocks to help possibly recession-proof your portfolio. In this video in particular, we're going to do an in-depth stock analysis on Westrock Company, which is a commodities company. Now, I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections. I'm going to give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps, and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So as always, folks, this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link that I will have in my description down below. Okay, let's get into what the company is. So Westrock Company provides fiber-based paper and packaging solutions in North America, South America, Europe, Asia, and Australia. Now, it operates in two segments: the corrugated packaging and the consumer packaging. Now, the corrugated packaging segment produces container boards, corrugated sheets, corrugated packaging, and pre-printed liner boards to consumer industrial products manufacturers and corrugated box manufacturers. Now, it also provides structural and graphic design, engineering services, and custom and proprietary and standard automated packaging machines, as well as a turnkey installation, automation, line integration, and packaging solutions. Now, it distributes these corrugated packaging materials and other specialty packaging products, including stretch films, void fills, carton sealing tapes, and other specialty tapes. Operates recycling facilities that collect, sort, grade, and bale recovered paper. And they provide lithographic laminated packaging products, as well as contact packing services. Now, the other segment specifically is the consumer packaging segment. Now, that they manufacture and sell folding carton that are used to package food, paper, beverages, dairy products, tobacco, confectionery, health and beauty, and other household, consumer, commercial, industrial products, and express mail packages for overnight courier industry. Now, it also offers and inserts and labels, as well as rigid packaging and other printed packaging products, such as transaction cards, brochures, product literature, marketing materials, and grower tags, and plant stakes for the horticulture market, and secondary packages and paperboard packaging for over-the-counter and prescription drugs. Now, in addition, this specific segment manufactures and sells solid fiber and corrugated partitions and die-cut paperboard components, principally to glass container manufacturers and the automotive industry, as well as producers of beer, food, wine, spirits, cosmetics, and pharmaceuticals. Now, you have to understand that Westrock is the second largest American packaging company, and it is one of the world's largest paper and packaging company. So let's go ahead and look at some of the news of the company. So a few weeks back, a Westrock Company said it agreed to buy the remaining stake in Grupo Gondi that it doesn't already own for $970 million, now plus the assumption of some debt. Now, Westrock said that the deal would give it more geographic diversity, particularly as North America onshoring of production becomes more popular. Now, Grupo Gondi operates 4 paper mills, 9 corrugated packaging plants, and 6 high graphic plants in Mexico. Now, the Westrock chief executive David Swell said acquiring the remaining interest in Grupo Gondi is the next strategic step in their broader North American paper and packaging expansion strategy. He said, as onshoring continues to grow in the region, Westrock will be well positioned to meet the growing demand. Now, on May 5th, 2022, the CEO also said, now, while we're in the early innings of their transformation process, they have made significant progress and have substantially more to come. Now, he said their future is bright, and he's confident that it will capitalize on the tremendous opportunities ahead. So that's some pretty good news. Now, last week's in particular, what hit the market is they posted their third quarter 2022 earnings. Now, the earnings per share exceeded analyst expectations. Now, the earnings per share was $1.47 a share, up from 94 cents in the third quarter of a year prior in 2021. The revenues are $5.52 billion for the quarter. That's up 15% from the third quarter of 2021 as well. Their net income is $337.9 million for the quarter, up from 51% from the previous quarter of 2021, and their profit margins are up as well, 6.8% from 5.2% in the third quarter of 2021. Now, revenue was in line with analyst estimates. The earnings per share surpassed analyst estimates by 2.4%. Now, let's go ahead and look at some of the fundamentals of the company right now. So the stock is currently trading at $42.08 a share right now, with a market capitalization of around $10.7 billion. Now, the stock over the past few months has taken a hit from its high of around $52 a share, but has been holding steady above the $40 a share mark over the past few months. Now, the company is projected to have $21.36 billion of revenue for the fiscal year of 2022, with earnings of around $970 million. Now, the revenues are projected to increase over the next few years to have around $22.27 billion by the end of 2024, with earnings in 2024 to be around $1.44 billion. Now, Westrock did have a large one-off loss of $363 million this quarter. Now, that's a non-recurring expense. Now, it impacted its June 30th, 2022 financial results, but it won't affect it in the future. Now, earnings are forecasted to grow about 21.25% per year. Now, let's do some analysis work on Westrock to see where it really stands. Let's first look at the valuation of the company. So, because Westrock is in the containers and packaging industry and has positive earnings, the price to earnings growth, PEG, and the price to earnings, PE, and the price to book ratio is the most appropriate valuation measures. Now, the price to sales ratio is less instructive than the PEG or PE ratio, since the company has positive earnings. Therefore, Westrock seems valued at a discount right now, with a PEG value of 0.59 times, one of the lowest in the containers and packaging industry. All through, their PE ratio is only 11.89 times. That is below the industry median of 14.75 times. So just based on the valuation alone of that, the PE ratio, it's a good buy. Now, let's look at the profitability analysis for the company. Now, although profitable on an operating basis, Westrock has poor profitability characteristics in comparison to the containers and packaging industry peers. Now, while it's on par with the norm on a gross and net margin basis, it does a worse job converting revenues to profits on an operating basis. Now, where they shine is they do have a dividend. They currently offer a dividend of around 2.4% per year, which is in line with both the industry average and the S&P 500. Do note here that Westrock dividend payments have been volatile in the past 10 years, but they have increased over the past 10 years. Now, with its reasonably low payout ratio of 28.1%, now Westrock's dividend payments are well covered by their earnings. Now, let's look at the growth rates analysis for Westrock. Now, it's been positive. The earnings trend at Westrock has been positive over the past 12 months. The company has reversed the prior period's loss to show a profit of $3.50 per share. Now, this performance was to be expected, as the typical company in the containers and packaging industry also posted better results. And now, if we also look at the financial strength over here, now they have a debt to total capital ratio of 41.13%, and that is in line with the containers and packaging industry's norm. Now, given that the company's operating profits right now are 9.43 times greater than the interest payments, there should be little difficulty in repaying its debts. So what exactly do the analysts say regarding this company? So on average, they have a buy and hold recommendation on Westrock. Now, the average price target that the analysts put on this over the next 12 months is $46.57 a share, with a high estimate being $59 a share and a low estimate of $36 a share. Now, going over a few of the analyst reports specifically. Now, the quant ratings rate Westrock as a hold. The primary factors that they have impacted their ratings are mixed. They said some indicated strength, some showing weaknesses. Now, with a little evidence to justify the expectation of either a positive or negative performance for this stock relative to most of the other stocks that they review. The company's strengths can be seen in multiple of areas such as the revenue growth, impressive record on earnings per share growth, and compelling growth in net income. However, as a counter to these strengths, they also find weaknesses, including a generally disappointing performance in the stock itself and a poor profit margins. Yes, over the past couple months, it definitely has performed poorly over the summer. Now, the CRRA report has a hold recommendation as well on this stock. Their hold opinion is based on the attractive relative valuation, which they think is supported by robust free cash flow, offset by moderating volume growth. Now, Westrock has a solid history of growth through acquisitions, and it has been consistently profitable. Since net debt peaked following the Capstone acquisition of $4.8 billion in November 2018, Westrock has reduced net debt by $2.9 billion to $7.7 billion as of June 30th, 2022, which is great. Westrock plans to acquire the remaining 68% interest in Grupo Gondi, which it already has, which implies an EBITDA valuation of 8.6 times before synergies, or 6.7 times if you give full credit for the $60 million in targeted synergies by year 3 of after the acquisition. So that would be about 2025. Now, risks to their outlook of the target price include lower packaging product pricing, increases in raw material cost or wages, lower productivity, lower economic growth, and unfavorable currency fluctuations. And looking at the last report I'm going to look at is the Ford Equity Research Report. They have a buy recommendation right now on Westrock as a result of their systematic analysis on the 3 basic characteristics that they look at. They look at earnings strength, the relative valuation, and recent stock price movement. Now, the company has produced a positive trend in earnings per share over the past 5 quarters. Now, however, while recent estimates for the company have been lowered by analysts, Westrock has posted better than expected results, and I foresee them continuing that trend. Now, based on the operating earnings yield, the company is undervalued when compared to all the companies that they cover. Share price change over the past year indicates Westrock will perform very well over the near term. Let me bring it back over here. So am I a buy, hold, or sell recommendation on Westrock? Here are my thoughts. So look at companies that could weather a recession. Looking at one of the top players in the field of commodity packaging, you really don't have to look very far than Westrock. Now, just looking at the numbers, it's financially strong. Westrock has a good value based on its price earnings ratio compared to the peer average of 18.6. Its earnings are expected to grow significantly over the past 3 years. Westrock has solid financials, but looking forward, and they also pay dividend payments as well. Now, but looking forward, you have to look at what are the growth drivers that are going to affect Westrock, with the economy going into a recession, or technical recession, and they haven't came out with the official term for the recession, but we're definitely in a recession right now. Now, the company benefits from continued growth in packaging demand. They have price increase actions and strong growth in e-commerce right now. The sustainable fiber-based packaging solution, significant demand in food service, and beverage packaging categories, and improved box shipment, they will continue to drive the growth for Westrock. And I looked at a recent NASDAQ article that they stated the following. Now, Westrock continues to invest in its business, including strategic capital projects and attractive returns and targeted mergers and acquisitions. And they have done that. They have a history of extremely targeted mergers and acquisitions. And their management team has been really good at that. It has been witnessing healthy demand for containerboard and corrugated packaging in the Brazilian market, and is well poised to capitalize on its growth with the ramp up of the Três Barras mill in the region. Now, the company will reap the benefits of strategic capital projects in its mill and converting systems to improve the overall cost structure. These investments will enhance Westrock's packaging capabilities in its served markets while reducing exposure to export containerboard and low-margin specialty solid bleached sulfate businesses. Now, Westrock successfully started the new state-of-the-art 710-ton paper machine at the Florence, South Carolina mill, which replaces its 3 old and obsolete machines. Now, this mill is expected to achieve full production levels at the end of the fiscal fourth quarter of this year. As part of the portfolio optimization effort, the company announced closing its containerboard and pulp mill in Panama City. Now, the move will save significant capital investment required to operate the mill, which now can be deployed in high return growth rate areas. Now, also, Westrock is reducing exposure to the fluff pulp and to focus more on the higher value markets. But based on all of that, I am a buy recommendation on Westrock, and I put a 12-month price target of $45.50 a share. I would make this a long-term play for both stability and dividend growth, and I don't think that we're going to have any more significant dips in the share price. I think it's going to hold above the 40 mark and stay between 40 and 45 for a while. So stay tuned over my next few videos. I'm going to be going over a series of stock reviews to recession-proof your portfolio. So there you have it, folks. As always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell if you'd like to hear daily stock and cryptocurrency reviews and recommendations from an unbiased source. Until the next update video later today, folks. Ciao.